13 minutes to 5. Some good news. The Bank of England has lowered interest rates for the second time in 3 months. But what does it mean for the rest of us? Now, it could be good news for people with credit cards or looking to fix a new mortgage deal, but not so good if you have money and it's saved money. You're looking to get the return on that. Let's speak to the mortgage advisor, Sally Mitchell, who's also a broker and business manager from the Mortgage Mum website. Sally, very good afternoon to you.
Good afternoon.
So the second lowering of interest rates in a couple of months. Is this good news?
Yes, it is. It is. We've got to take the positive side of this. Not so great, as you say, if you've got savings, but there are 8.4 million mortgages out there in the UK at the moment. So for a very, very large amount of people, it is going to be good news. Tracker rates will change. Standard variable rates with lenders will change. We've had a flurry of emails today already from many lenders saying it's been reduced by 0.25% to reflect that Bank of England change. It's going to take a while for fixed rate mortgage holders to see any benefit because obviously you fix for a certain amount of time. So when you come to remortgage, hopefully the rates that we're seeing now will actually be lower.
Again, not great news for people who've got money invested or for looking for returns.
No.
However, I mean, something happened in America in the last 24 hours, Sally, so their stock market is soaring. The markets globally are growing. We had the budget last week. Could it be that we've gone through perhaps the very worst of all the horrible recession and interest rate rise, and now we're perhaps seeing a slightly more tranquil period?
I think we are. We have seen it. It's been volatile. It's been up and down in the last few months, things changing all the time. And of course, the budget last week did make the pound flatline slightly for a short time. With the news overnight in America, we'll have to see how that plays out, how the new policies from President Trump, I can actually say President Trump now, affect us. But certainly the extra spending that our government are planning to do will affect inflation. So although it's 1.7 at the moment, they are projecting that inflation will rise probably up to 2.75% next year. So, the cost of living is still going to be increasing, not half as bad as it was, but it's still going to be increasing. But hopefully there will be a period of calm and tranquility once we settle into this new period. And the most important thing with the base rate is, I think, with it being reduced, it is proving to give so much more confidence to the general public and consumers. And a lot of it is perception. It's a weird thing to say.
No, of course.
When people feel confident, then they make changes and they move. And there's been a lot of people who have held back on moving or purchasing because they're unsure of what's going to happen. Are things going to get worse? Well, this is a sign from the Bank of England that no, things are not going to get worse. We will see, the word they kept using was gradual reduction, not a tumble in rates, but a gradual reduction, hopefully to, around 3.5 or 3.75% base rate instead of 4.75 by the end of next year. So things are looking good.
3.5, I'd take it straight away compared to the sort of rates we had sort of late 80s, early 90s. I would take 3.5 straight away.
Exactly.
Sally,
those bad old days.
Sally, thank you so much for joining us. Sally Mitchell, mortgage advisor
Pleasure.
And business manager from the Mortgage Mum website. So the Bank of England has lowered the interest rates ever so slightly.